There are several types of business entities available to do business in Canada, and the procedures and requirements to register each of them slightly vary between provinces. A Canadian private corporation can be registered by a minimum of 1 or 2 shareholders depending on the province of registration, and with a minimum capital of only $1. All provinces except British Columbia, New Brunswick, Quebec, Yukon and Nova Scotia additionally require appointment of 1 resident director. Following business setup, a Canada company is required to file an annual tax return and financial statements. Audit requirements vary between provinces, but legal exemptions usually can apply to small and medium businesses. Only Ontario and British Columbia currently provide for the registration of limited liability partnerships, which require the appointment of at least 1 general partner. There is no requirement to appoint resident partner, S, or manager. In other Canadian provinces, local regulations either do not provide for the registration of limited liability partnerships or strictly restrict their use to lawyers, accountants, doctors and other regulated professions. Both limited and limited liability partnerships are tax-transparent entities, meaning that earnings are deemed automatically distributed to the partners and must be included in their personal corporate income tax statements. Canadian public corporations are essentially the same type of business entity as the above-described private corporations. Only significant difference is their memorandum and article will allow to issue freely transferable shares. They require the same amount of paid-up capital $1 upon incorporation and can also be formed by foreigners, provided 1 resident director is appointed in the provinces which require so. Forming a Canada Public Corporation is usually done when the company owners are planning to finance their business by raising capital on the Toronto Stock Exchange or the Canada Securities Exchange or by issuing shares to third-party investors. Canada regulations allow for the registration of branches of foreign companies, but may subject the foreign company to local regulations. Registration of a branch requires the appointment of a resident to act as the foreign company representative in Canada. Registering a branch instead of a separate subsidiary enables our client to minimize accounting and bookkeeping obligations, as the accounts of the head office and the branch will be the same. Canada does not formally recognize representative offices, which are de facto treated as a branch and hence subject to the same tax return and financial statements filings obligations. No Canadian corporate income tax is however payable provided the representative office can demonstrate it only engaged in market research or promotion the business of the parent company. Best uses for a representative office. Registering a representative office is usually used to test the Canadian, before registering a branch or a subsidiary.
If you are planning to incorporate a company in Canada, then you should consider hiring us. We are a pioneer in global business incorporations, having experts present in different countries. Contact us to get your own rate card. LQ is having a presence in 7 countries, including Canada. We are happy to meet you at yours or at our office on the day and time of your convenience. Visit www.lqconsultants.com for more information.